This video is designed to help you start a distribution business. At the end of the video, you'll find a valuable gift. It's a distribution business plan that you can download, and will lay down for you, step by step, everything you need to know to start a successful distribution business of your own. If you are new to this channel, make sure to hit the subscribe button for more videos like this. Before you let your mind weave an entire distribution business plan, it's important to understand its essence. What is distribution business? Distributors are business entities that buy goods in bulk directly from manufacturers or distributors, and then sell them in smaller quantities to retailers. Although in modern times there are examples of B2C wholesaling, distributors per definition sell their goods to other business entities. This means their buyers are not the end consumers, but instead the retailers and similar business organizations the consumers buy from. Because distribution businesses buy in bulk, they usually get special discounts and overall cheaper prices. In conclusion, distributors are sort of mediators between manufacturers and retailers. This puts them somewhere in the middle of the supply chain. Finding a product. There are millions of physical products on the market today, serving many different needs. Your goal here is to find an amazing product that would serve a need completely and instantly. The skills you'll need here are good negotiating skills, an eye for detail, an active imagination, a good and thorough understanding of your target customer. Have you ever had someone come to you and told you, "Hey, I have something that is unique and I want to import and sell"? Assess his product based on the following questions. How to find a good product. Uniqueness or remarkability. Reliability of supplier. Credibility of supplier. First mover advantage. Authentic origin of product. In addition to knowing how to tell a good product, you'll also have to know where to source for one. Specify your market. There are millions of products that are stored in warehouses daily. Specifying the type of products or industry you want to venture into will help you prepare your facility to meet up with the storage requirements of such products. For instance, if your market is clients in the restaurant industry, you will be dealing with a lot of food products. It is crucial to keep your warehouse facility at a certain storage temperature to keep the products fresh. Your customers may need help shipping frozen food or shipping frozen meat. Specifying your market will position your business to fulfill these needs. Additionally, specifying your market will help you decide on many components of your business. These components include the size of the warehouse, storage equipment, utility costs, and the inventory management techniques to adopt. Necessary equipment. Investing in high-performance warehousing equipment is key to the success of your distribution business. The right storage equipment will be the reason your customers keep using your facilities. You should have the following equipment in your warehouse. Various storage options, such as carousels, racks, cabinets and shelving, and liquor storage. Lifting equipment such as pallet jacks, forklifts, and service carts. Conveyors such as belt conveyors and gravity roller conveyors. Labeling options such as shipping label printer. Hiring staff. The success of your distribution business depends on the people who comprise your team. With the right team structure, you can boost your distribution business efficiency and improve customer satisfaction. Additionally, some warehouse equipment will require manual operation. So, it is important to employ skilled labor. Choosing the finest team is vital, because employees will play a crucial role in your warehouse operations. Here are some vital positions you may want to hire as you start your distribution operation. Inventory Control Manager. Order Management Specialist. Material Handler. Warehouseman. Warehouse Manager. Shipping Specialist. Demand Planning Manager. Distribution Center Manager. Machine Operator. Integrate Warehouse Management Systems. A warehouse management system is perfect for 3PL companies and businesses that offer warehousing services. Many of the problems that every distribution company has on a daily basis can be solved with the help of a WMS and top ERP systems. Warehouse management solutions quickly and effectively evaluate warehouse data, pinpoint inventory shortfalls, and highlight urgent inventory needs. With the aim of enhancing your warehouse organization and productivity, this enables you to view crucial figures at a moment's notice. Marketing. Marketing is a foundational part of starting a business. The distribution industry uses the B2B business model and your target audience is mostly e-commerce businesses across various niche markets. Implementing e-commerce marketing strategies that will reach your unique clientele is important. You can integrate e-commerce marketing automation tools into your business operations. It may be a bit challenging at first, but implementing a clearly structured marketing strategy will help you get results. Besides digital and online marketing, you can also list your warehouse on a wholesale directory. This will help you get the attention of wholesalers that may require a warehouse to store their products. How much does it cost to set up a warehouse? Setting up a distribution business can be quite expensive. A 30 by 40 yards warehouse structure will cost about $25,000, while a 50,000 to 60,000 square foot distribution center may cost between $750,000 and $1 million, depending on the amenities and building materials. The next part of the video is not specific to a distribution business. Nevertheless, this knowledge is essential for success in the distribution business, as well as in any other business. Ignore it at your own peril. Operating a successful distribution business will depend on the following 4 conventions. 1. A practical plan, with a solid foundation. 2. Dedication, and willingness to sacrifice, to reach your goal. 3. Technical skills. 4. Basic knowledge of management, finance, record keeping and market analysis. As a new owner, you will need to master these skills and techniques if your business is to be successful. Finding a niche. Small businesses range in size from a manufacturer, with many employees, and millions of dollars in equipment, to the lone window washer, with a bucket and a sponge. Obviously, the knowledge and skills, required for these two extremes, are far apart, but for success they have one thing in common. Each has found a business niche, and is filling it. The most critical problems you will face, in your early planning, will be to find your niche, and determine the feasibility of your idea. Get into the right business at the right time, is very good advice, but following that advice may be difficult. Many entrepreneurs plunge into a business venture, so blinded by the dream, that they fail to thoroughly evaluate its potential. Is your business idea feasible? Before you invest time, effort, and money, the following exercise will help you separate sound ideas from those bearing a high potential for failure. Identify and briefly describe the business you plan to start. Identify the product or service you plan to sell. Answering yes to any of the following 3 questions means you are on the right track. A negative answer to all of them means the road ahead could be rough. 1. Does your product or service satisfy an unfilled need? 2. Will your product or service serve an existing market in which demand exceeds supply? 3. Will your product or service be competitive based on its quality, selection, price, or location? Market analysis. For a small business to be successful, the owner must know the market. To learn the market, you must analyze it, a process that takes time and effort. You don't have to be a trained statistician to analyze the marketplace, nor does the analysis have to be costly. Analyzing the market is a way to gather facts about potential customers, and to determine the demand for your product or service. The more information you gather, the greater your chances of capturing a segment of the market. Know the market before investing your time and money in any business venture. The following questions will help you collect the information necessary to analyze your market, and determine if your product or service will sell. This brief exercise will give you a good idea of the kind of market planning you need to do. An answer of no to any of the questions indicates a weakness in your plan, so do your research until you can answer each question with a yes. 1. Do you know who your customers will be? 2. Do you understand their needs and desires? 3. Do you know where they live? 4. Will you be offering the kind of products or services that they will buy? 5. Will your prices be competitive in quality and value? 6. Will your promotional program be effective? 7. Do you understand how your business compares with your competitors? 8. Will your business be conveniently located for the people you plan to serve? 9. Will there be adequate parking facilities for the people you plan to serve? Planning your startup. The following questions are grouped according to function. They are designed to help you prepare for opening day. Merchandise. Have you decided what items you will sell or produce, or what services you will provide? Have you made a merchandise plan, based upon estimated sales, to determine the amount of inventory you will need to control purchases? Have you found reliable suppliers, who will assist you in the startup? Have you compared the prices, quality, and credit terms of suppliers? Business records. Are you prepared to maintain complete records of sales, income and expenses, accounts payable, and receivables? Have you determined how to handle payroll records, tax reports, and payments? Do you know what financial reports should be prepared, and how to prepare them? Finances. A large number of small businesses fail each year. There are a number of reasons for these failures, but one of the main reasons is insufficient funds. Too many entrepreneurs try to start and operate a business without sufficient capital, money. To avoid this dilemma, you can review your situation by analyzing the following 3 questions. 1. How much money do you have? 2. How much money will you need to start your business? 3. How much money will you need to stay in business? In order to answer the second question, how much money will you need to start your business? You need to prepare an estimate of all your startup costs. Here is a list of items you may need to take into account. Note that this list is for a retail business. Items will vary for service, construction, manufacturing or online firms. Decorating and remodeling, fixtures and equipment, installing fixtures and equipment, services and supplies, beginning inventory cost, legal, professional fees, licenses and permits, telephone utility deposits, insurance, signs, advertising for opening, unanticipated expenses. Now, the answer to the third question, how much money will you need to stay in business? Must be divided into 2 parts, immediate costs, and future costs. From the moment the door to your new business opens, a certain amount of income may come in. However, this income should not be projected in your operating expenses. You will need enough money available to cover costs for at least the first 3 months of operation. The following list will help you project your operating expenses on a monthly basis. Typical expenses for 1 month may include your living costs, employee wages, rent, advertising, supplies, utilities, insurance, taxes, maintenance, delivery, transportation, miscellaneous. Now sum up the total estimated monthly expenses and multiply it by 3. This is the amount of cash you will need to cover operating expenses for 3 months. Deposit this amount in a savings account before opening your business. Use it only for those purposes listed in the above list, because this money will ensure that you will be able to continue in business during the crucial early stages. By adding the total startup costs to the total expenses for 3 months, you can learn what the estimated costs will be to start and operate your business for 3 months. By subtracting the totals of the lists from the cash available, you can determine the amount of additional financing you may need, if any. Now you will need to estimate your operating expenses for the first year after startup. The first step in determining your annual expenses is to estimate your sales volume, month by month. Next, determine the cost of sales. You may want to use a spreadsheet to do this. After startup, the primary source of revenue in your business will be from sales, but your sales will vary from month to month because of seasonal patterns and other factors. It is important to determine if your monthly sales will produce enough income to pay each month's bills. An estimated cash flow projection will show if the monthly cash balance is going to be subject to such factors as the following: failure to recognize seasonal trends, excessive cash taken from the business for living expenses, too rapid expansion, and slow collection of accounts if credit is extended to customers. Conclusion: if you have carefully answered all the questions in this video, you have seriously thought about your goal. However, there may be some things you may feel you need to know more about. Owning and running a distribution business is a continuous learning process. Research your idea, and do as much as you can, yourself, but don't hesitate to seek help from people who can tell you what you need to know. As we conclude this video, it's time you get your free distribution business plan gift. Go to the description below this video to get it now. It is completely free, no strings attached. Thanks for watching. If you enjoyed this video, please like and hit the subscribe button for more videos like this.